The US dollar is definitely losing its dominance in global trade. It's no longer an opinion, but a fact. The numbers might be extremely small, but dozens of countries will beg to defer. Recent developments suggest that China is actively working to promote the internationalization of the yuan and reduce reliance on the dollar. Let's talk about this. All right, so I want to take a quick minute, share some thoughts, try to cram as much numbers and recent events into one video as I can. So as always, if you guys appreciate and enjoy getting these RTD quick takes, definitely hit that thumbs up button, show your support for the channel. And all this information is pointless if others don't find out about it. So take a minute, share this so people can find out an alternative perspective on what's going on here in the global monetary system. But recently, according to reports, China has signed over $582 billion worth of global currency settlement agreements exclusively utilizing the yuan since 2016. These agreements involve more than 40 countries and regions, including Russia, Venezuela, the United Arab Emirates, Oman, Bahrain, Qatar, Kuwait, and Saudi Arabia, just to name a few. The motivation behind China's move is clear: to boost the role of the yuan in international trade and protect against the weaponized dollar. By facilitating direct settlement in the yuan, China aims to shield countries from the impact of U.S. sanctions, as seen in the aftermath of what's going on between Russia and Ukraine, or at least what we're being told. The ability to conduct cross-border trade settlement in the yuan reduces dependence on the U.S. dollar and provides an alternative for countries to safeguard their economies from the tyrannical approach of the Western nations. China's efforts to promote the internalization of the yuan have gained momentum in recent years. The country has signed several agreements with various nations, including Brazil most recently, to use their own currencies instead of the U.S. dollar for trade. The People's Bank of China has established bilateral currency swaps agreements with more than 40 countries and authorized 31 yuan clearing banks in 29 countries and regions to conduct trade in the Chinese currency. These measures, coupled with the launch of the Yuan Cross-Border Interbank Payment System, or CIPS, which was established in 2015, has facilitated the efficient use of the yuan in cross-border transactions and accelerated internationalization process. The CIPS, has played a crucial role in reducing transaction costs and processing time, making the yuan more attractive for global trade financing. With close to 1,366 participants from over 109 countries and regions, the CIPS has built a stable financial infrastructure and service platform for cross-border yuan settlement. As a result, the yuan share in global trade financing has increased from less than 2% in 2017 to 4.5% as of today in 2023. Now, in the grander scheme of things, 2%, 4% is extremely small, but outside of the G7 currencies such as the UK, the Japanese yen, and other currencies in that traded weight basket, 2% to 4% in this short period of time just shows the interest from other countries to further diversify outside of the globalist preferred currencies that I just mentioned a moment ago. This growth indicates that the CIPS has the potential to deepen financial cooperation between China and the rest of the world, expanding the influence of the Chinese currency on the global stage. Everyone's caught on, even the mainstream media, to the de-dollarization trend that's been observed in various parts of the world, which reflects a response to the declining global influence of the U.S. and its currency. The U.S. Federal Reserve's loose monetary policy, which has led to record inflation over the last year plus, has eroded confidence in U.S. assets altogether, or as I might say, U.S. liabilities. Many countries are seeking alternatives to the U.S. dollar for trade, including conducting trade in their own currencies. For instance, India and Malaysia recently agreed to settle bilateral trade in the Indian rupees, as well as the ASEAN member states have committed to promoting the use of their currencies in the intra-ASEAN trade pact just recently signed a couple weeks ago amongst 10 countries. Reducing dependence on the U.S. dollar not only insulates countries from the impact of U.S. monetary policy, but also safeguards against the use of the dollar as a financial weapon through sanctions. The ability to trade in the yuan or other currencies provide countries with a shield against the negative effects of such actions, as U.S. dollar shares of international reserve declines and countries increasingly seek alternative currencies, becomes crucial in reducing the trading partners' reliance on the greenback itself. To add on to it, the development of the CIPS has the potential to benefit the SMEs, which stands for the small and medium-sized enterprises. These enterprises, particularly those engaged in cross-border e-commerce, require support in hedging against rate risk at this current time. By improving cross-border transactions and creating a favorable financial environment, the CIPS can boost the development of the SMEs, traditional trade, and new trade models. This in turn strengthens foreign trade companies and stimulates economic growth for some. The yuan takeover is still extremely premature, yet China's effort to promote the internalization of the yuan and reduce dependence on the U.S. dollar are gaining traction. Through a series of global currency settlement agreements and the establishment of the CIPS, China is actively working to reshape the landscape of international trade and finance. The rising prominence of the yuan as a settlement currency not only provides countries with a viable alternative to the U.S. dollar, but also strengthens their resilience against economic uncertainties and geopolitical tensions. And as the world witnesses the gradual erosion of the US dollar's dominance, it is becoming increasingly clear that China's bold move in promoting the yuan are reshaping the global financial order. The era of the US dollar as the undisputed reserve currency may be coming to an end at some point in the not too distant future. No, it won't be this month, next year, 2 years from now, more so 5 to 10 or longer, but even still, nothing of this magnitude would happen overnight. It would be gradual, and going from 2% to 4% is just enough to start waking the world up to alternatives. And the rise of the yuan signifies a new chapter in the evolution of international trade. And at the end of the day, as China continues to expand the reach of the SIPs and deepen financial cooperation with its trading partners, the global influence of the Chinese currency will continue to grow. The world will pay attention to these developments, for they have far-reaching implications that will shape the future of the global economy. It is good to say that everyone in DC, as well as Switzerland, where the global monetary order resides, is paying attention to these events. While this could just be smoke and mirrors, it's good to say, whether it's the East-West rift that they're presenting to the world, at the end of the day, all central banks, all countries are in the same boat. They're going out with the old and trying to bring in the new. And fiat currencies, whether it's the yuan, the USD, the euro, you name it, they're all being rebranded right now. And unfortunately, what's on the other side of this is not more liberty and freedom for you and I. Just thought I would share this. What do you think? Leave a comment down below. Look forward to seeing you in the next RTD Quick Take. Enjoy your day.